Good day, another educational video. This now we're gonna be talking about motives and corrections. So basically, motive waves, okay, which we can also refer to as reversals and corrections, which can also be referred to as trend continuation. So this one will be trend reversal. So I'm saying this because chances are where the motives ways will be, there will be a trend reversal. So a trend reversal simply means if we're going down, it's time to go up, you know. Maybe I should also qualify here and say trend reversal and pullbacks. I'll explain why I say this. Okay. So let's go. We have this as our basis now. Okay, so let's start with motives. So if for whatever reason market has been going down, and then so if market has been going down for some time and it happens now that it's going up, so it's basically what is happening here, what will be happening around here, around this area, it will be referred to as emotive waves and trend reversal. So whatever that the market will be busy doing here, it won't be a correction. I don't know. I'll explain why. Because if whatever that was happening within this area where we had a BOS, if the outcome was the market will continue to go down, then it means whatever that was taking place in this area, even after the BOS, it would mean that this was just a correction. Because correction in their nature, when you're going down, you will correct A, B, C, you'll continue going down. So corrections are like that. If you're going down, we're gonna correct, we'll keep on going down. And then if you were going up, we're gonna correct A, B, C, then we'll continue going up. So essentially here, I've actually even covered corrections and so on. So corrections are trend continuations. The trend was down, we correct, trend remains down. Trend was up, we correct, and then the trend remains up. So, but here you can see trend was down, but this price action here, it's a motive slash trend reversal slash pullback. So if I'm saying it's a motive, it means whatever that is happening in here, it must be different from whatever is happening in here, because there should be a distinction between the two. They might look the same, but they won't do they won't have the same outcome of where the price is going to go after that has taken place. So basically what I'm saying is, if for whatever reason we have a structure here and the trend now changes, which is trend reversal, and and it goes up like this, it means here we have to look at it as it was a motive wave. So whatever that was forming in here, it might also look like three waves and so on, but whatever that was forming in here, it was a motive and not a correction. So how do we determine that? It's gonna be a little bit deeper. There's what we call momentum. So usually, as and when this break of structure happens, I think now we know what break of structure is from that other video. As and when that break of structure happens, we should take into account the momentum of whatever the price action is here. So usually on what they call the RSI or the MACD, this will be now your indicators, and usually they would show up here. So basically what I'm saying is this will be a classic example of what momentums looks like. So if we can see that this cycle and this cycle, we can see that this one is getting higher and the price is also getting higher, then we say we have bullish momentum. Then what it means is there's prospects. I think people need to understand this. There's prospects, or there's likelihood that the trend, whatever is happening here, it will be a motive and not a correction. The reason for that is because we are having strength in the momentum of the bulls. Unlike if it was a correction, in most cases, what will happen is even when the price is going up, you will see the MACD will be going down. So that we call divergence. So so in short, simply put, if I were to try and expand even further here, I would say it will be supported by divergence on MACD or RSI, depending which indicator you use. So for you to spot a potential correction in the making on your divergence and RSI, sorry, on your MACD and RSI, you will notice there will be divergence. But this one will be supported, and we are not saying it's definitely going to be a motive wave, but it if we have momentum, it will be supported by bullish slash bearish. So basically bullish is up and then bearish is down. Bearish momentum. So motive waves, reversals, what we will look for our indicator, and we'll try and look where there is a momentum. Then we can say the likelihood is, if we have momentum within these waves, then we might just come to 61.8, and we can make a case to start buying here and then going upwards, and we will put our stop loss just below the previous lower low. So this is what it means. But when it's a correction, if we see this happening and our MACD or RSI gives us divergence between these two waves, then there's likelihood that the market will continue going down. So in a nutshell, this video is just explaining the difference between motive waves, pullbacks, reversals. So why I say pullback is because sometimes even this one, although it starts as a motive, but it can be a motive for a bigger A, and then a B, and then a C, and this will be looked as a pullback, and after that pullback the trend will also go down. So on this degree we can look at it as a motive going up, but on the bigger degree it becomes now sort of like a correction as well. So I hope without complicating things, I've managed to sort of like clarify what the two are actually what the two actually mean. Going down, and if the trend goes up, reversal. And going down, and whatever happens in here, correction, going down. So this part is correction, trend continuation. So you have to put that in your mind. Correction, every time the price goes and then it stops, then it's a correction, then it's trend continuation. But if the price goes down and it comes here and it reverses, it means it's a reversal motive and a potential pullback. Because I'm saying that because it can even go up to here and maybe still go down as well. So I hope this one clarifies the difference between a reversal and a trend continuation. I will quickly go briefly onto the market and look at examples of what trend continuations and reversals are. So this is like we're looking at daily chart. So this will be a classic case of what correction will be. So market has been going down. So it means whatever this pullback is, A, B, C, it means it's a correction. Then we go where? Down. You see? And we went up here. So for those who are a bit advanced, they will know that it's a bigger A, B, C. And then what does it mean? We're still going down. If we're going down and we get an A, B, C, where do we go? Down. You see? And if we go down and we get this move here, correction, where do we go? Down. We go down, correction, down. You see? Another correction here, A, B, C. Where do we go? Down. I don't know. So we've been on a downtrend for a long time. Because if we look at it, actually, this is lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So now, where we are now, we've since had a what they call a break of structure. Can you see here? We broke the previous lower high here. We broke it, and what does that mean? We look at what's happening in here. We look at what's happening in here, and we try to make a case for what is happening in here. If whatever is happening in here, it suits the characteristics of a motive waves, meaning that we need to look at divergence, we need to look at MACD and see what is happening. If we see here that whatever formation that is happening, even when we have broken structure, like I said the other time, break of structure doesn't confirm that there will be a reversal. But we should look into what is happening in here. And as we look at what is happening in there, actually we see that there has been an upward move and then followed by correction, new high, correction. So it means that the more this thing is making higher highs, the more, if this thing makes another high here, yes, they might drop, which is absolutely fine. They might drop, which is actually absolutely fine, but it means now, because we'll be having higher highs, then there's potential that after they drop, they might go up again. So just so we are on the same page, and obviously we will look at what the MACD is doing, and take into account what this whole thing could be. And we could actually find that this is going to lead all the way to now breaking even this lower high. And this now will be a reversal because we'll be going down and now we are going up. If this was a correction, it means we would end here, we would end somewhere around here and continue to go and make a new low, go down. So this was just an example to illustrate the difference between reversal motives and trend continuations. I hope everybody is clear, but you can watch as many times as you can just to okay.